Yesterday, investors put the US stock market in motion, pushing it sharply upwards. Perhaps market participants woke up this trading week after a break after the New Year's holiday. If it's true, we could expect a further growth of American stocks. Nevertheless, further developments will depend on the US CPI for December. Besides, a lot of investors are monitoring progress in the talks on security in Europe between the United States and Russia. The sides did not reach any agreement at the talks in Geneve yesterday, but it comes as no surprise. On Monday, despite the market boost, the major US stock indexes closed mixed. The Nasdaq edged up by 0.1% following a series of steep declines. The Dow Jones shed 0.5%, the S&P 500 closed 0.15% down. However, the index regained almost all losses. As a result, a strong bullish candlestick appeared on the daily chart, indicating an upward reversal. Today, futures on the S&P 500 are trading at early 4,670 points. The expected corridor is between 4,640 and 4,710. Today, we could see a further growth in the stock market. Market participants are hesitant about a further trajectory of the US dollar, so its index has been gyrating without a clear pattern for the last 2 days. Meanwhile, the euro is holding the upper hand over the greenback. Let's wait and see whether the US dollar will receive any support from the Fed's officials, who are speaking at the Senate tonight. Investors are anticipating their remarks on high inflation. For the time being, the US dollar index is hovering around the level of 96.00. It's likely to trade in the corridor between 95.50 and 96.10. While the US dollar is oscillating in a narrow range, awaiting positive catalysts, the USD CAD pair is trading within the wide borders between 1.2600 and 1.2720. Interestingly, oil prices have reached the strongest levels in 2 months with a bullish outlook. If crude oil extends its rally, the USD CAD pair could break the lower border at 1.2600 and develop a downward move. Currently, the pair is trading at about 1.2638. Bearing in mind that the crypto market is correlated with the US stock market, we are watching a downward correction among digital tokens. The US dollar remains at elevated levels despite some fundamental uncertainty due to soaring inflation and the Fed's countermeasures. At the same time, Bitcoin has lost 8% since the beginning of the year. It plummeted by 39% in the last 2 months. Yesterday, the flagship cryptocurrency fell to $39,500, having printed the lower low since September 2021. And today, Bitcoin rebounded to $41,758. Nevertheless, analysts suppose that it could continue its decline towards the lows of 2021. Let me remind you that the crypto was trading at $29,000 in June with a brief dip to 28,800 points. Now, the market is alert to the publication of the US CPI on Wednesday. Today, Wall Street is trading a bit higher. In the recent months, inflation has been holding at uncomfortable levels that assured the Federal Reserve to resort to drastic measures. Amid expectations of monetary tightening, the S&P 500 and the Nasdaq fell sharply. A lot of analysts believe that the Fed might announce the first rate hike in March. Perhaps this forecast will come true in the near future. Today, Fed Chairman Jerome Powell is due to testify at the Senate. He is likely to be slammed due to persistent high inflation. Consumer prices in the United States shoot in April 2021. However, the Fed Reserve hoped that it would slow down soon. This has not happened in reality. The central bank responded with the tough countermeasures only in November. And that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you tomorrow.